All right. Well, thank you everyone for attending this month's market update webinar for the month of September. We'll start as always with disclosures. Silverstone Financial LLC is a registered investment advisor. Information presented is for educational purposes only and does not intend to make an offer or solicitation for the sale or purchase of any specific securities, investments, or investment strategies. Investments involve risk and unless otherwise stated are not guaranteed. Please be sure to first consult with qualified financial advisor and/or tax professional before implementing any strategy discussed within the presentation. And of course, past performance is not indicative of future results. You can see our website for additional disclosures. And throughout the webinar, if you have any questions, please submit them using the Q&A button below. I'll address them at the end. All right, quick bio about me. My name is Jeremy Eppley. I'm a certified financial planner, accredited investment fiduciary, accredited portfolio management advisor, and chartered retirement planning counselor. Silverstone Financial is a fee-only fiduciary registered investment advisor. We provide comprehensive wealth management services, including financial planning, investment management, tax planning, and estate planning. You can learn more about us on our website. All right, well, we can get right into what happened last month. It wasn't a ton of things that happened in the month of August, but the most interesting one, at least, the one that had a lot of buzz, especially from some of the more mainstream media outlets, not just those that cover finance news, but was the Grayscale, which is the investment crypto manager that offers the Grayscale Bitcoin Trust, which is the largest investment holder of Bitcoin. They won their lawsuit against the SEC for essentially the SEC kept rejecting their ETF application, so making their GBTC, that's the ticker for the Grayscale Bitcoin Trust, into an exchange traded fund instead of a fund that's traded over the counter, which has higher barriers to entry, so less people can use it. The SEC rejected them over and over, and they sued them with at least a claim of unfair regulations or being dismissive. I'm not exactly an expert on the lawsuit, but they were trying to have equal treatment in comparison to how other exchange traded funds were being handled. They thought that they met all the requirements that was required to be exchange traded fund, and that the SEC was making decisions that were not consistent with past ones. Anyway, they ended up winning, it seems, against the Securities and Exchange Commission. It's not guaranteed that their GBTC fund is going to become an ETF anytime soon, but there was a large rally in the crypto markets after this announcement. There was a lot of hype around it, a lot of excitement that we would finally get a Bitcoin ETF, which, to be honest, in my opinion, should have happened in 2022, 3 years ago. It has been quite slow, and I'd like to see it become a product that advisors can recommend and investors can hold. It'll be great to see, but again, the SEC still has a lot of leeway and can decide a lot of how they're going to move forward, if they're going to try to double down, or if they're just going to end up letting Grayscale, and I think there are 6 or 7 other providers like BlackRock and Invesco, which are really massive investment managers, let them have their ETFs. Inflation was the other important one. Now that we've gotten past a lot of the Federal Reserve interest rate hikes, inflation and future Federal Reserve announcements are the 2 biggest interesting financial news and data points to keep on top of. Earnings season is also important, seeing how companies their margins and their earnings and their costs and how all that is flowing through, especially with inflation getting to labor costs and inflation just overall causing a lot of shifts in the market, seeing who are what investments are really winners, and other investments, the managers that had a harder time traversing all the financial mishap and such that happened because of the pandemic. So nothing too crazy happened this month. Inflation rate increased technically from 3 to 3.2%, but that was in line with expectations. About a year ago, we had a month with zero, a month-over-month inflation, and so that it's now 13 months back. So that got replaced with what happened this month-over-month, which was 0.2%. So increased slightly. We'll probably, in my opinion, be sticking around 3% for a while, probably for about a year or so, maybe 2 years. But in my opinion, 3% isn't that bad. A lot of people have normalized what they expect with their finances. It was not as bad as the 9% or almost 9% that we saw in the aftermath of the pandemic. So I'll keep you updated in the future months when we get additional data reads. But again, nothing that exciting happened. It was in line with most economists' expectations. And then the last notable event that I'll bring up was Jerome Powell speaking at the Jackson Hole Economic Symposium. This happens every year. It's kind of a placeholder for an actual Federal Reserve rate hike announcement. We did not have one last month, in the month of August. The next one will be in 2 weeks, September 20th, I believe. We'll see if there's another rate hike. It's somewhat expected that we might get either no rate hike or a 25 basis point one. I'll talk about it more in the next slide, but nothing new out of the Jackson Hole Symposium. A lot of just Jerome Powell saying the same things, where they're going to be steadfast in their rate hikes and holding the interest rates high as long as the economy doesn't falter, and as long as inflation does not fall back to 2%. So how I read that, and how the markets seem to have, is high interest rates are going to stay for 2 years, maybe some cuts in 2024, and inflation will likely stay at 3 for a while, slowly inching closer to 2, and eventually either hitting 2 or the Federal Reserve being happy with 2 and some change, 2.5, 2.3, something like that, and they'll stop rate hiking or do some cuts. We shall see. I talked a little bit last slide about the lack of a Federal Reserve meeting for August. So nothing new here. July had a 25 basis point hike. Nothing in August. Expected either 0 or 25 next month. If there's a 25 basis point hike, I would see the market falling at least a little bit. If it stays steady, we'll have a little bit of a rally, but no one can really know, at least especially 2 weeks out, what the Federal Reserve is going to decide to do. So August performance. Last month during the webinar, I had discussed, and we'll get to the charting in a future slide. But I predicted that we would have a little bit of tapering back, not necessarily a sell-off, but we had some really great growth in June and July, and I expected August would not continue, which is what we saw. Nothing that was an extreme shock to the system, nothing that were huge losses. The S&P 500 and mega caps moving 1%, 2%, even 3% in either direction isn't very much historically. So we saw in August Dow Jones performing the worst out of mega caps, and the S&P 500 at losing to almost 2.5%, almost losing 2% on the S&P, about 1% mega cap names. Small caps had performed well in the past few months. They were doing catch up, and they seems to have gotten over their skis. So there was a little bit of profit taking there, down 4%. Global still underperforming the U.S. as it has in the past, and about in line with small caps. Aggregate bonds returned 0.5% loss. Again, pretty flat nothing crazy. Gold, pretty flat, nothing crazy, a 0.5% loss. Crude oil was, 2% increase in crude oil isn't a lot, but there was a disproportionate amount of news coverage, I feel like, on a lot of the, not necessarily crude oil itself, but on energy stocks. A lot of commentators, investment analysts had kind of taken a break talking about oil stocks, at least from what I was seeing, in June, July, and a lot have gotten back on the bandwagon saying, well, these oil stocks are providing great returns still, and we haven't seen crazy shocks in the oil supply. And Saudi Arabia, I won't get this exactly right, but I think they still have a million barrel per month or per day, cut across the board, which they implemented a few months ago. And the expectation was that they would, bring that back a little bit and increase supply, which would have made crude oil fall. But they haven't done that yet, which means crude oil has stayed flat or increased slightly and increased profitability to a lot of the energy companies, which out of this heat map, you see the energy sector being one of the more consistently green, maybe not as bright as NVIDIA or Eli Lilly or some of the biotechnology companies or some of, I think these are Chinese stocks and such, but Amazon, Google, Chinese stocks. But consistently across the board, pretty green, which is interesting to see. And Bitcoin had a pretty rough beginning of the month. Since then, in the beginning of this month, the first few days, since the SEC announcement of the lawsuit being won against them by Grayscale, Bitcoin's jumped and I think recovered slightly from this losing 10% last month. But Bitcoin being volatile is nothing new. Year to date, we'll quickly go over it. We see green across the board, maybe the first month that we've seen that, where there's not a single one that that doesn't have at least one negative mark next to it. Crude oil being up 4% for the year, which means half of that came just this month. So they didn't have the greatest beginning of the year. Gold up 7%, Bitcoin, a solid number here for those that have invested at least recently, being up almost 60% for the year. Aggregate bonds, there's a lot of talk about how bonds are where it's at, especially because of the higher interest rates. They got to remember, a lot of these bond funds that people actually invest in are still holding old bonds that they've increased in price or decrease in price to have a better deal and bring it in line with the current rates. But still, the bonds haven't been performing incredibly well for the year. They're not expected to be beating the S&P 500 or anything, but mega caps in comparison to bonds, especially at the beginning of the year, a lot of people talking about put everything in bonds. Not saying either way you should or shouldn't, but it's something to consider. Still seeing underperforming of aggregate bond prices and bond returns for the year. Something I've been personally looking at in the past few months. Global stocks underperforming, a lot of U.S. stocks in line with the small caps, just like this month. And the Dow Jones, a lot of the industrial names have not done as well this year, mostly because all the money is going into mega caps, mostly being just dragged up by this NVIDIA being up almost 300% for the year, which is kind of ridiculous to see, but hey, it leads to returns for most people, so I guess it's good. Always bring us back to this chart, which is a great one, which talks about the cyclicality of the markets, the seasonalness of the markets. At last month, of course, we were right here between the beginning of August, end of July. And I was saying, well, these next 2 months historically are a few months where we give up some returns before Santa Claus rally or end of year rally, and it's not every single year like this. There are plenty of anomalies. Of course, this is an average over almost 70 years, but I expected it to go approximately how it does each year. I said that we'd probably see slight sell off this month, which is what we saw. about 1 to 2%, and it wasn't anything to be concerned about, especially if you're investing for the very long term. But just to know that there might be some motion and that investors should take it slow, be understanding of the risks, and sticking with it all. This next September, I think I'll talk more about it in this next final slide, talking about some technical analysis. But we're probably going to see a little bit more gains taking, and it's a little bit of a loss in the markets, but still nothing to be too concerned about. How I've been watching the markets move and the commentators speak, it's just kind of gotten boring. Where in the beginning of the year there was more, visceral language about it's going to go up or down, and they're making big calls, and a lot of that has tapered off. And I don't say that in a bad way at all. It's actually usually a good thing for the markets. When politics are boring, it's usually going well. When the markets are boring, it's usually going well. I think there's a lot that goes with that. Probably extends to medicine and such. So boring is good, and those that are in the markets should stick with it and be calm, but understand that this next month you might see at least one news headline be like, the S&P fell, this amount, and be comfortable with it. So this next chart, it's always great when 1 month you say something will happen and then it actually does happen. It definitely doesn't happen every single month, and anyone that says that they're always right is definitely wrong. But I copied the exact same lines that I had drawn last month. Last month, we could see up to this point, where this line, the few days into August, the last day was this big sell-off. And previously, I think before the summer, I think in June or so, I had drawn this range that we had been trading in. Broke out slightly at the end of last year, and a sell-off, and we had oversold, and we came back into this range. So range of 400 points of the S&P 500 between 3,800 and 4,200, and we kind of traded there, and I kind of expected that to continue. When we were in the June meeting, this is when I had said I kind of expect us to start trading back down a little bit, trading flat, and there I was wrong, where we ended up having a great rally, and it's nice to be wrong, call it go down and see it go up. But if I thought that we'd probably go down here, I think it would have been inconsistent if I hadn't reiterated and said during the August monthly market update webinar that we'd probably sell off. We had hit the top of this rising range here, and I expect to, when you add the cyclicality of it, the point that since August and September historically are bad months for the market, when you add that, I thought we should have stayed in the range, and we broke out, so there were gains to be taken, and just normal expectations of when you see this good of a return in such a straight line, that it's always great to see it continue, and you hope it does. But I had expected that we would go down, and this is almost exactly the range that I couldn't have said it made a W or any other kind of a shape or letter, but this is kind of where I expect us to be. And if I would have to guess only up or down this next month, I probably would almost copy this and put it right here and see us going down to maybe 4,400 or 4,300. Maybe we'll trade flat. We could go up. Again, this is a game of predictions and not guarantees. And a really good, if you have a really good idea of what the market's going to do, you're at like 60% certainty. That's a great certainty for investors, whereas like slightly better than a coin flip. So again, take everything I say with a grain of salt. But I wouldn't be surprised if we see a little bit of continuation of this, where especially if we get a rate hike announcement, I think September 20th, when the Federal Reserve meets, I wouldn't be surprised if the market came back closer to this 4,200 range. But again, it would be great to see it go up and have wealth building for all the all the investors that they attend the webinar and our clients and their friends. It's usually nicer when the markets go up. Makes my job easier. All right. So that was a rather short webinar, but that's the last slide. I hadn't received any Q&As this month. So if you have any, please type them in. But I'll just say, it's just like the markets. You know, when the webinar is boring, it's probably because there isn't much to say, and it's because the markets are performing kind of how you want them to. So everything is good to see how the market's been doing, and that there isn't any crazy, you know, new war being launched or you know, supply chain breaking or new pandemic coming up. When markets mellow out, it's usually a good thing. All right, I don't see any coming in, so I'm going to end it here. Thank you all for attending this month's market update webinar, and I look forward to seeing you next month, October, hopefully with good news and additional hopefully fun news as well to keep us on our toes. All right. Good night, everyone.